What is up, everybody? Today is Wednesday, July 10th. We took two trades this morning, and both of them were absolute bangers. Really, it was one trade. I closed it out early at first, and then I decided to re-enter. So going into today, I came in with a bearish bias, and the reason why I came in bearish was, well, if we take a look, we had this retracement on, when was this? Tuesday, and we came down on this leg. We came down into the OTE area, and then we decided to continue pumping overnight. And I saw this this 4-hour fair value gap, this bearish one that got inversed overnight. And so I wanted to see a potential retracement down into it as a propulsion up into higher prices, into all-time high, because trying to short for an extended move right now is completely insane. It's just been a complete uptrend for, I don't know, since April. I mean, like, look at that. It's just constantly going up, small corrections, another small correction, and then boom, we just continue up into all-time highs. Now, everybody loves to say, oh, we're at all-time highs, we should short. This is going to drop. I want this to drop. Well, you keep doing that, you're going to lose. The higher time frame trend is continuously bullish. I will not look for long extended moves on shorts until we get a close below this level right here. So until then, I'm playing longs. And so for last night, looking at the action for Asia, we saw a lot of consolidation. London manipulated up into that, and so I wanted to get a short position in here, but only to that 4-hour inverted fair value gap, only to that. And then here in the morning session, we ended up getting a accumulation manipulation move up, so we were expecting that this was going to be distribution down, and then at 10:30 we would get that reversal. And look at that, just beautiful. That's exactly what we got. So on the 1 minute time frame, what did we mark out this morning? We marked out buy side liquidity here, which was all-time highs, and we wanted to see price for the micro session, so from 9 o'clock all the way to 10:30, split those up into 4 quarters. We wanted to see accumulation at first. We wanted a manipulation move on up, but we didn't get that. We actually got a manipulation move on down. So this was accumulation, and really, if you look at this, all of this right here, accumulation, manipulation down, distribution up. Now, price will do one of those things. We go from accumulation to expansion, then to retracement, and it can go back to accumulation. Or it can go into accumulation, expansion, reversal, and then accumulation. That's what's considered the IPDA model, the interbank price delivery algorithm. I believe that's what ICT calls it. So if you don't know much about that, take a look at it. So like we have here accumulation, expansion, reversal, accumulation, expansion, reversal, and then we got some more accumulation, expansion, reversal, accumulation, expand. Like it just keeps doing that repeatedly. I believe that's how it works. Don't quote me. I didn't really watch much of those videos, but I still keep it in mind. Regardless, we got accumulation, manipulation down, and distribution up. And so once we tagged that higher time frame buy side liquidity here, I wanted to see us reverse, I wanted to see us to, what am I trying to say? Invalidate. That's the word. I wanted to see us invalidate a fair value gap. And so I marked out all of the bullish fair value gaps that we kept getting. We had a 5-minute fair value gap, and yeah, I was just a little salty at first. Yeah, I was hoping that this 5-minute fair value gap was going to get inversed, and it didn't. We tapped into this 15-minute fair value gap. I wanted to see that get inversed, and it didn't. We continuously kept, closing above it. And then eventually we moved. I was looking for something here, but because I saw this chop, I decided to wait until 10:08, the last quarter. That's where I was going to take a play to see a move on down, at least to equilibrium of the latest range that we had. And so let me see here. We got this 1 minute bearish fair value gap that was created. So I could have taken that right there, and I did on one account, but I said, you know what, that's a little too soon. So I decided to take my gains very early at a 1-to-1, and I wanted to wait for further validation. We ended up continuously creating inverse fair value gaps where you could have gotten in. And so when we started seeing, you know, this 5-minute bearish fair value gap that I marked out, so you can go to the 5-minute time frame, you'll see it better. Let me pull that up again. This 5-minute fair value gap right there, price taps back into it and displaces once again. So when I saw that, and I saw that this 5-minute fair value gap did not get traded through, and we ended up getting a reaction out of it, that's when I decided to wait again, and I saw this other 5-minute fair value gap get created, and I believe it was also a 1-minute. Let me, where am I? Sorry. A 1-minute fair value gap that was created right here, right? We ended up getting this uptrend, then created a low, put in this high, and we had a market structure shift, break of structure, whatever you want to call it. We got a high, we got a lower high, or a higher low, a lower high, a lower low. And so I wanted to get in on the retracement on this 1-minute fair value gap, and my stop was going to be above this high, because if price truly wanted to continue down further, there was no reason for price to come back up and retest this fair value gap again, because we already had displacement off of it. We should not be retesting that. If we are going to retest that, then I'm in the wrong trade, right? That, because we on a higher time frame, we are bullish. And so if this ends up coming back up here, yeah, I'm in the wrong trade, and I should start looking for longs. And so when I saw that 1-minute fair value gap get created, I put in my order at the beginning of that fair value gap, stop above this swing high right there, targeting that 4-hour inverted fair value gap. But really I was targeting this sell side liquidity level, which did not get tapped. Unfortunately, we bounced right off that 4-hour inversion fair value gap. But before I even hit there, I took some profits off at this low. I took some more profits off at this low. And then I left my runner at this low right here, which quickly came back and got tapped out. But regardless, this was a nice 1 to 2.8, but my profits ended up being at around a 1 to 2. Still pretty good. I mean, that's a good trade overall. Now, if you were looking for the reversal back up, I told the team in the Discord, I was like, you know, I want to see us move on up, take out liquidity to come back down into equilibrium, to then further continue us up into all-time high territory, which, dang, that is beautiful. We ended up getting that distribution down, and then we obviously reversed on up, and that's just amazing. Now, where could you have caught that? Well, zoom out to the 5-minute time frame. You see here, we know after taking this liquidity right there, we came down and bounced off of this 4-hour inverted fair value gap. We had a strong reaction out of there. So I personally would not have waited for any kind of market structure shift or anything, because the market structure shift didn't come until it tagged up here. That's a little too late, right? So 2 things you could have looked for: a change in state of delivery. So what is one way to see that? You have this level right here, and when price closes above that and it taps back into it, you could have entered in long, stop below this low if you wanted. There was also a fair value gap that was created here on the 5-minute time frame, and you could have targeted up here. You could have put your stop at this swing low right there too, because we had that strong reaction out of a higher time frame PDA raid. Then so that was why, you know, you could have just taken that fair value gap, targeted all-time highs, and left a runner if you wanted. Now, how could you know how far it's going to keep going? Well, that's where you can get standard deviations involved, where you take this manipulation right there, and you could have taken some profit at the -2, the standard deviation, which is where we tapped and reversed a little bit. Now we're just playing around in this area. If we get a 5-minute close above this 2.5, we could easily see -4. So that's how I play all-time highs, right? There's not any levels that you can target up here, and that's where standard deviations come in handy. You take the manipulation leg of the latest liquidity grab. That's the way I use it. And so it's this low to this swing high, and boom, we hit that -2. That was a pretty perfect, you know, tap, and then kind of consolidating around in this 2 to 2.5 area. So we could reverse, or we could get a close above that and continue on up. Regardless, so many good trades today. Very, very predictable price action if you know what you're looking for. And so I hope you guys were able to bank on this. You know, just keep in mind the higher time frames. If you're like here, I was playing shorts, but I fully knew that it was just a retracement on a higher time frame. I'm not going to hold for a huge expansion all the way down here targeting. No, there's no reason to. You got to look at the higher time frame. And that's where a lot of traders get lost. They believe that, oh, we're supposed to dump. It's dumping. Let's all get in. I'll tell you right now, there's probably a lot of traders that got in here. They probably got in on this retracement, hoping to continue back down. And then they got stopped out and they go, oh, price action is so crazy today. It's weird. No, it's not. Price action is doing what it's supposed to be doing. And I'm guilty of being one of those traders too. I used to do that all the time. I used to blame the market for my shortfalls. And no, the market is an efficient market. It does what it's supposed to do as long as you know how to read it. And so the higher time frame, like look at the 15-minute chart. Where is there any indication of this being a reversal on down? Look at the 1 hour chart. We've got swing low to a swing high to a swing low, and now we're creating a swing high. Clearly we're going to target all-time highs. So don't get caught in that. Keep in mind where you are on the higher time frames always, and I hope you guys ended up green today. So I will catch you all later. Peace.